Hello everybody. Although we use banks to keep our incomes and expenses and all of the savings into the bank accounts, but have you ever thought that how do banks make money in India? Like any other businesses, banks also use profit-based business model in order to earn money in India. Just like other businesses, banks have also other kinds of expenses, and therefore in order to cope up with those expenses, banks had to earn money in India. And therefore in this video, I will give you a detailed guide as to how banks earn money. So without any further ado, let's get started with the video. How do banks earn money in India? Here are some kind of different avenues through which banks earn money in India. Number one is the net interest margin. While banks borrow money at a very lower rate of interest, comparatively bank charges a very high rate of interest when it offers loan to the customers. And this difference in the interest is known as the net interest margin, and this acts as a significant source of income for banks. For example, whenever you just open a savings bank account and the money that you deposited in your account, this is not the real money that you deposit in the account. But in actual, that is the same money that the bank borrows from you. And therefore, in compensation with that borrowed money, bank offers you some kind of interest to your savings account. And that interest rate is around 5 to 6% per annum. And therefore, there are also other various sources through which bank borrows money from us, that is from their customers. And these sources are like FDs, like fixed deposits, or RDs, which is known as recurring deposits. These are the ways through which bank borrows money from the customers. Now, whenever any customers come to the banks for asking for some kind of a loan, whether it be educational loan, whether it be home loan, or whether it be personal loan, bank charges a heavy rate of interest to those loans, right? Whenever the bank give loans to their customers, they charge heavy rate of interest. That rate of interest can vary from 12% to 15% to even 30%. And therefore, this comparatively high difference in the rates of interest when the bank borrows the money and when the bank lends the money to the customers, this acts as a significant source of earning to banks. Number second is the interchange fees. Now, this is also the another source of income through which banks earn money. Banks earn money whenever you carry out transactions when you use a debit or credit card for carrying out any purchases. For example, whenever you made a purchase from any merchant, what happens is that whenever you swipe the cards, maybe a debit or maybe a credit card, what happens is that bank charges a small rate of interest from the merchant side bank account, and therefore this is the way through which banks earn money through interchange fees. Number third is the account and ATM related fees. In addition to the various interchanges fees, banks also levies charges on various kinds of accounts and ATM related fees. Number one is the ATM fees. See, what happens is that every customer is allowed to carry out only a limited amount of transactions per month from the ATMs to the bank other than their own home bank. For example, if you have an account of any X bank, but instead of using the ATM of that same bank in which you have the account, you use the ATM of another bank. Let's say you have used the ATM of ICICI Bank, instead you have the bank account of the HDFC Bank, right? Now you have some certain limits of transactions. Therefore, when you exceed the limit, you have to pay some ATM fees to the bank account. And this is how bank earn money through ATM fees. Moreover, banks also charges heavy fees whenever you carry out the transactions within the same bank of the same ATM, but when you exceed the transactions limit. For example, if you exceed the transactions limits per month of the same ATM that you're using in the bank, therefore you still have to pay some kind of fees to the bank account. Number two, minimum balance fees. See, what happens is that every customer are allowed to keep some minimum balance in the bank account, and whenever they run out from these minimum balance account, they have to pay the fees for that running out of the minimum balance account, and this acts as a fine, and this also acts as a source of income for banks. Number third is the late payment fees. See, what happens is that banks also charges some kind of fees and fine to the customers whenever that customer fails to pay the deadline for the credit card bills. And whenever you fail to pay the deadline for the credit card bills, then you have to pay some fine to the bank, which acts as a source of income for various banks. Number four is the investment fees. There are various banks that offers investment services to their customers and their clients. And whenever the banks offers various kinds of services, investment kind of services to their customers and clients, the customers has to pay some kind of investment fees as a kind of a brokerage fees to the bank account. And this also acts as a source of income for banks. In addition to these kinds of sources, banks also earn money from other sources as well. Number one is the interest on investment. What happens is that sometimes financial institutions or banks invest your saved money into kind of a government or other security related bonds, and therefore they also earn money as a kind of a brokerage firm, right? When they just invest your money into government or security related bond, and therefore as a kind of a return that you get, you have to pay some portion of that return to the bank, and this also acts as a source of income for banks. Number second is the Forex Operations. What happens is that whenever you carry out the exchanges of currency from one currency to the other currency, banks act as a brokerage or an intermediate and therefore charge the fees for exchanging the currency. For example, if you want to change the currency from Indian national rupees to US dollars, banks will act as a broker and therefore it will convert your currency to another currency. But in addition to this, they will also charge some fees and therefore banks earn money from this source as well. Number third, commission earned on third party products. Banks can also earn money by offering you some kind of mutual funds or some kind of insurance policies, and when the customers and the clients buys those insurance and mutual funds, banks also earn money as a kind of a brokerage, and therefore this also acts as a source for making money for banks. So these were the ways and different avenues through which banks earn money in order to carry out the expenses. See, banks has their own expenses as well because it acts as a business, right? Because banks has to pay money to their staff, banks have to pay money for the rents, banks has to offer some kind of services to their customers, right? Therefore, they have to maintain their incomes and expenses as well, and therefore bank earn money. The bottom line is that banks earn money by acting as a bridge between depositors and borrowers, and therefore this acts as a significant source of income for various kinds of banks. So this is it for today's video, guys. I hope you enjoyed this video, and if you do so, please hit the like button and share and subscribe to my channel. I will keep bringing this kind of videos in the future. I'll see you guys again next time. Till then, stay curious. Bye. Take care.